Before I ask the questions, let me just give a very short introductory remark. Probably you will have questions that this is an insurance section. Why we got so many different financial regulators sitting here talking about these regulation issues? The reason is very simple. The financial market is interconnected. Many of our life and general insurance products are sold through banking channels, which are supervised by Hong Kong MA. And many MPF, our pension fund products, are in fact sold by our insurance agents. And we did investigation work on behalf of MPFA at low cost. And then one of our insurance products, the ILAs, the investment-linked insurance products, need to be approved by the SFC. So you can see that in Hong Kong, the financial market is interconnected. And even outside Hong Kong, very importantly, many of our intermediaries or our participants are internationally active firms. So very glad that we got Michael joining us today, also sharing his views from an international perspective. And so this is the first point. The second point, basically for behalf of our panelists and also the floor when you ask questions, I'll give you a very short update on where we are regarding about the implementation of direct supervisions of the intermediaries. We heard our chairman and Carrie mention earlier, early part of these sections. We will take it over, the direct supervisions of the intermediaries. And so far, we have been working very hard in these years, working together with the industry, coming up with 5 sets of the proposed rules and guidelines for public consultation. We have also issued 1 set of explanatory notes on the licensing requirements that will help the insurers to comply with the new licensing requirement. Separately, we engage an outside consultant firm to help us to build up and automate licensing systems so that we'll be able to provide strict full licensing process to the industries. As we are going to next year very shortly, I would call next year would be the year of engagement and year of implementation. Year engagement means we will start to engage more frequently with the industries on all our initiatives. We, in fact, start talking with the industry, and there will be more and more briefing sessions. So feel free, if you are interested in inviting us, I'm sure my colleagues, and if I'm possible, would talk to your people, explain all our new regulatory requirements. We see the engagement, the explanation is very important part of the rollout of the new requirements. And then the second part would be on the implementation, on how to issue the license, how to do the supervision work, and also carry out the disciplinary work if necessary. So today, we invite all these very experienced financial regulators and tap on their views and experiences on all this work. So maybe, Mike, let me throw the first questions to you. In your short presentation, in particular on the last few pages, you mentioned some of the issues that ASIC has noted in relation to some of the misconducts in the Australian market. So any advices to our industry people? We got a lot of insurers sitting here. Any lessons we can learn so that we won't repeat the similar issues that you see before?
Thank you, Stephen. I think it's fair to say that a lot of the issues that we've exposed and we've been investigating have been industry-wide issues in the insurance sector. And many of them have been issues where it's difficult for any one insurer to move away from the practice that we think is problematic because that would be detrimental to them from a competition perspective. So there's effectively a number of first mover problems that we have seen in Australia, collective action problems. And so we see our role in exposing those problems and encouraging the whole industry to take steps to address those problems, conscious that no single insurer can do that on its own. So I think what I would say to the industry is that it is important that where you see an issue cutting across the sector, and you think that this, ultimately will lead to poor consumer outcomes, it's important to call that issue out and to work with your regulator, with your industry associations, to make sure that those practices don't develop and become pervasive. Because I think once they become pervasive, it can be very difficult to move away, and it becomes more difficult for the regulator to address those issues in a way that is efficient and can mean a quicker result for consumers. So I think being conscious about those problems, those industry-wide problems, is really important, because ultimately, when there's a mis-selling scandal, the cost of cleaning that up is much more significant than the prevention that could have taken place in the first place.
Thanks, Michael. I just have one point to add by listening to what Michael has mentioned is, I have been with the IA for 18 months now. One thing I note is that the industry has been very shy in talking with the regulator. Very seldom they come over and talk to us. Now with all these functions, you see us, we are approachable. You put the names to our faces. The whole objective is that if there's any issues, give us a call, come to talk to us, although we know we are a bit far away from the central, from the Causeway Bay. But come to talk to us and talk about all these issues, get it done, get it resolved as quickly as possible. So this is one thing I totally agree with what Michael has mentioned. Maybe now I move on to Keith, because we have been talking about all these conduct issues for some time, and Keith has been in the investigation, in the supervision on all these conduct issues for a long period of time. So you have then handled a lot of conflict of interest, suitability, mis-selling cases. Why don't you share with us your experience or any advices that you can pass on to our audience? Thanks.
Thanks, Stephen. A couple of points that I would like to share. I think in terms of mis-selling or the distribution practice, I think there are 3 points that I would like to share. The first point is about misrepresentation. Nowadays, when we talk about misrepresentation, most of the time it's not about what the sales or the relationship manager tells you. It's more about what they haven't told you, right? So it's very important that we need to have a sort of a very robust regime for that. Now, in our experience, for example, when people were selling accumulator, what is important embedded in this product is the leveraging feature of accumulators. So when people are selling accumulators, they will tell you that, maybe they will tell you that it's more like a ELN, but in fact it's not, because there is a very important element embedded in the product, that is the leveraging effect of it. So your exposure will be enormous if you are not careful about the leveraging effect. So this is point number 1, is about misrepresentation. Point number 2 is that in our experiences, the selling process can be very simple, right? You know the product, you know your client, and you match the product with the clients. So the number 1 step is to have sufficient product due diligence. Now, the trouble is that it's not sufficient for a firm to do product due diligence. The important thing is about training. It's about frontline staff understanding the products. So the trouble is that in our experience, most of the time, people selling the products, they know a bit about the product. They don't know everything. They know a bit. The trouble, the saddest thing is that they have a very serious selling pressure to sell the products to their customers. So it causes all sorts of problems. Number 3, it's about the matching process. Now, the KYC and the matching process is actually a very dynamic process. But what we see in some of the intermediaries practices, something like everything is reduced into a very mechanical process. Now, it would be a trouble. For example, I'll give you an example. It's like if you reduce a person's investment objective, which probably capital preservation, into a person's risk appetite and match it with certain products which you have rated. The trouble then is that you may result in selling a person a product that is not guaranteed. That is not a guaranteed product, right? Because everything is reduced into a rating. So we see a lot of these sort of problems. It's not only that the whole process is like reading out the risk factors, reading out this, reading out that. Now, reading out something is not explaining. Reading out is you trying to protect yourself. It's not trying to serve the customers. So to make it a meaningful process, it's actually a very dynamic process. It's not that mechanical. You have to take into account the customer's personal circumstances, investment horizons, and all that, and then match it with the product features. It's a dynamic process in that you also have to take into account the person's personal needs, whether it's for retirement purpose, whether it's for capital preservations, or it's actually investing for capital gain. Now, I think I'll stop here, but I guess these are the points that I want to share this morning.
Okay, thank you, Keith. Then I would like to ask Steve to share with you. In particular, there's one thing I guess the industry would be very interested, that many of our life or general insurance products are sold by banks. And if there's any mis-selling of all these insurance products, these cases are currently investigated by Hong Kong MA. And for the outside world, they don't know the process. They don't know how these cases will be investigated and the disposition of these cases. So why don't you share with the industry how Hong Kong MA deal with all these mis-selling cases?
Sure, thank you, Stephen. There are different sources that cases will be drawn to our attention. For example, custom complaints would be the obvious channel. If a customer, files a complaint with the HKMA against a bank in respect of the selling of an insurance product, then obviously we'll receive the complaint, and we will, based on the information provided by the complainant, we would then consider whether or not there's sufficient prima facie evidence to consider we need to conduct an investigation into complaint, into, for example, allegations of fitness and properness and misconduct of the institution or the individual as appropriate. Complaints coming to us directly would be one source. There could also be anonymous informer cases that are sent to our office, and we will also look at these cases individually. And then the third main sources would mainly come from the surveillance work or the on-site inspections that we conduct at banks to look at the selling practices of banks in respect of the insurance activities. So when a case comes before us, we will look at the allegations made by the complainant, and and on top of that, obviously we'll ask the information, ask for information from the banks to verify whether the allegations made by complainants are valid and genuine. And the whole investigation process will depending on the number of allegations and the complexity of the products can last for anything from a couple of weeks to maybe several months. So that's how we generally conduct our investigations into not only insurance-related complaints, but all sorts of complaints against banks in relation to the provision of financial products and services. And we treat all banks equally. I mean, it doesn't matter whether it's a big, large retail bank or a small wholesale bank branch in Hong Kong. When we receive a complaint against a bank, all the cases will be screened by us, and a decision will be made as to whether or not and how we'll conduct the investigation. That's generally how we operate when we receive, that kind of cases. Yep.
Okay, thanks, Steve. Now let me turn to Ginni. As said earlier, our insurance agents are selling a lot of the MPF products. Then there are, I don't know how many millions of the MPF accounts are outstanding. So being the regulators on the MPF products, one of your concerns definitely how to protect the integrity or securities of all these MPF data, and also how do you analyze these data. So can you share with us how MPFA work on these areas?
Thank you, Stephen. Just to give some background of the authority, we regulate directly the trustee that administers the scheme, and we set standard for all the MPF intermediaries. Basically, the fund line regulators would be the financial regulators in Hong Kong, the SFC, IA, and Hong Kong MA. And within the MPFA, for us, mis-selling by MPF intermediary definitely is one of the priority. But for us, because we directly regulate the trustee, so we actually, for our priorities, actually data risk management has been the regulatory concern within the MPF space. As you may see, for the MPF world, we have like 9 million of accounts and 4 million of scheme members. So, for the data risk management, there are 2 aspects. One is the data accuracy, because imagine like every month the contribution go into every member's account. So the accuracy and the is very important. So we have seen cases that the contribution are not invested according to in the member's instruction because of system issue or UAT problem because of some scenarios were not catered for. And for us, one case is definitely more than enough. It's too much already. We can't even accept one case. And the other aspect is the security. That's links to the cyber security. This is also very our top concern, because we have seen cases like Cathay Pacific, Union Trans-Pacific in the past in 2018. So imagine for us, for a trustee, if there is any threat of data or data leakage in our world, that would be a disaster. So in the past few years, so the authority has been putting a lot of efforts in encouraging the trustee to try to do some data review, data integrity review. This is definitely our priority.
Okay, thank you, Ginni. Now, Mike, let's turn back to you, and let's change away from all these conduct issues, because I don't want to bore all the people sitting here. Let's go back to more interesting digitalizations, because we heard all the speakers talk about artificial intelligence, big data analysis, all these things. We at our market conduct working group also look at all these things. Can you share with our audience what internationally our regulators are doing addressing about the digitalization issues?
Yeah, thank you, Stephen. As I mentioned earlier, we've been working on 2 issues papers. The first one we published on digitalization in insurance, which is a general paper which covers how digitalization is impacting the full product life cycle within insurance. And we're now working on a more dedicated paper on the use of data, big data, artificial intelligence, machine learning, again, on the full insurance product life cycle. These are issues papers at this stage, I think which recognizes that although the digitalization has been around for a long time, the impact on the design and distribution of financial products is still rapidly evolving, and different markets around the world are at different stages of adopting digital ways of distribution. So the first paper on digitalization examined things like the use of robo-advice for the sale of insurance products. And now we're considering how the use of data, big data, social media data, can affect how insurers go about designing their products and selling those products. Clearly, there are many potential issues that could arise. And I think as insurance supervisors, we don't want to preempt what the outcomes might be, but we want to share experiences and note some of the potential concerns. So at this stage, these are very much issues papers. I think the next phase of work will be moving into the creation of application papers. And what an application paper does is take the standards that exist in ICPs 18 and 19 and apply them to different scenarios. And these are quite important because they provide supervisors with more concrete guidance on how they should be applying the supervisory framework as it relates to different issues. So it's really important, I think, that the insurance industry engages in the development of these materials, because insurance supervisors around the world are grappling with these different issues. And I think to the extent that jurisdictions are at different points in the life cycle and at different points of development, I think there's a real chance that there'll be leapfrogging taking place as we see different markets go straight to, for example, distribution of products through smartphones rather than traditional computer or internet distribution. So it is really important. There's lots of potential issues here, and we're grappling with all of them. I think as supervisors, we really do value the sharing of different experiences so that we can understand how different markets are responding to emerging issues.
Okay, thank you, Mike. Keith, you have been working on the disciplinary side for some time. For our industry, they have never been subject to the disciplinary process because all currency is still subject to SRO. Can you explain to our industry what is the SFC disciplinary process? And please talk about all this positive side, okay?
Okay, thanks, Stephen. The disciplinary regime, let's say it's a very important tool for a professional body. Now, over the years, the SFC's disciplinary action is subject to appeal to a body called the Securities and Futures Appeals Tribunal. So it's the tribunal that developed the whole regime. And over the years, there are very important principles that the tribunal laid down. I think there are 3 points that I can mention here. The first point, of course, is when we take disciplinary action, the regulator or the tribunal or everybody have to be fair and proportionate. So this is a very important point. By fair, you mean like case will be punished in the same way. So it has to be proportionate, taking into account the circumstances of everything, personal circumstances, the conduct, seriousness, and all that. But what is more important is the second point. It's public confidence. Now, when we dish out a penalty, a very important thing that a tribunal has to bear in mind is that whether the penalty is sufficient to maintain public interest, to maintain the public's confidence in the profession. Now, this is very important. So if somebody committed something very serious, for example, it's like stealing clients' money, it's probably unlikely to happen in this industry. But if, let's say somebody is stolen clients' money, and then you just give him a reprimand, this is definitely not enough, right? So the proper course is probably to suspend, withdraw your approval for that person. So people like this should not be allowed in the industry, regardless of his personal circumstances. Now, there might be a lot of different mitigating factors. For example, this person might say that because I'm very poor, I need the money to pay for my medical bill. Now, this is not enough, because personal circumstances in this scenario is not enough. The overriding interest or the overriding concern of the tribunal must be the reputation of the industry, of the insurance industry in your case, in our case, securities industry. So this is a very important second element. The third element is that if there are a lot of similar misconduct, then the regulator should not be hamstrung by precedents. So, for example, if there are a lot of misappropriation cases, you have to step up the penalty. So apart from taking away a person's license, you have to consider imposing heavy fines, for example. So point number 2 and point number 3 actually, as we develop, you realize that it's actually defeating point number 1, fair and proportionate. But all these factors, you have to balancing it out. You have to take a balanced approach. So the main point here is that is to let the public to have confidence that securities industry professionals are competent people who adhere to a very stringent set of code of conduct, and failing which the regulator will take serious action. So it's important. So it's not a mistake. It's not bad. It's actually good for the industry. It's actually very important, as Chairman Chang alluded to this morning, about building up a very important regulatory framework for the industry, so that the public will have confidence in the profession. Thank you.
Okay, thank you, Keith. Just want to make one point very clear. IA is still considering about our own disciplinary process. We haven't finalized it, but I take a look about the key principles that must be fair and proportionate. So we are still in discussion with the industry, and we'll announce it in due course. Now let's turn to Steve again. What's the latest initiatives for Hong Kong MA in relation to all these market conduct things? Are there any coming up?
Well, the focus has always been on protection, customers' interest, and no matter it's our enforcement work or our ongoing supervision work, what we try to do is whenever there's an issue in front of us, what we try to do is, first of all, consider the customer's interest, which is our number one priority, making sure that the customer's interests are not prejudiced, customers are being treated fairly. Keith has mentioned earlier about several key elements in respect of how intermediaries should conduct a proper or adequate CDD, make sure that there's no misrepresentation of the products being sold to customers, staff training, and all that. And I think what we will do would echo what Keith has mentioned, and we would even go beyond that. We would also look at how products are being sold to, say, for example, the vulnerable customers. Are the products being explained to them properly and adequately? So the product disclosure is very important from our point of view. And the most important of all, I think, is customer stability. I think the general sort of sense is that intermediaries should understand the needs of the customers and not the other way around, which is intermediaries trying to sell what they want to sell to their customers. So there has to be a very good, a robust process to ensure that whenever intermediary sell a product to a customer, the suitability process is done correctly and robustly to avoid any possible, mis-selling. Yeah.
Okay, thanks. Ginni, any initiative from the MPFA in these areas?
For us, I mean, members' interest is always our top priority. We need to protect the interests of all the members of the MPF, the pension, in Hong Kong. So for us, in the past few years, we have been promoting pension governance within the trustee for the scheme. Pension governance is actually broader than the corporate governance we know about for the corporates. And we did workshop last year, and early in May this year, we had a governance charter where all the trustees, they pledge their commitment to uphold the values and act in the best interest of the scheme members. And recently, in November this year, the authority issued a set of governance principles, basically governing the administering of the pension scheme. So altogether, we have 10 principles. The principle basically sets out some expectations we have over the conduct of trustees when they administer the scheme. So it would cover like the delegation of the board, the fit and proper of the senior executives, how they need to drive to deliver value for money products to our scheme members. That may include like regularly review the fee levels, and also like assess and then identify, assess and manage conflict of interest, particularly when you see the sponsor, the trustee, and the fund managers, they are all within one financial group. So pension governance has been one of our priority. And other than that, writing on what I've mentioned about the data risk management, actually for us, we actually kickstart a thematic review on the data management and cybersecurity for our trustee to ensure that they have a robust framework to make sure that to minimize any chance of the theft of data. Mm-hmm.
I have received 2 questions from the floor. So in case if you haven't done so, please feel free to use your QR code to put the questions. Mike, this question definitely is for you. This question is regarding about the Royal Commission review. Probably for the floor, in Australia, a Royal Commission was set up to review the practices of banking sectors, superannuation sectors, insurance sectors, and asset management sectors. So the question is, the Royal Commission has just issued an interim report. So are there any lessons that you can share with us regarding about their comments on like the insurance sectors or asset management sectors?
There are many comments. I think it's the interim report, I think, is around 1,000 pages. So there are many findings. Actually, the interim report covered the first 4 rounds of public hearings that the Royal Commission conducted. It's now conducted in total 7 rounds of public hearings, so an additional 3. And the interim report only covered the first 4. The insurance round of public hearings was actually in September and was the 6th round, so it wasn't covered in the interim report. But there were many findings in the interim report that no doubt apply to the insurance sector more broadly. I think you might have seen some of the media reporting about the interim report. It was a very strong report, very strong criticism of the industry, of the regulators as well. And so I think we are now absorbing all of this and waiting in earnest for the final report and also the government's response to the final report. I think what's apparent is that the kind of conduct that has been exposed has revealed that insurers, but more broadly financial institutions, often talk about putting customers at the center of their business, prioritizing customer interests. And these mantras are widespread, but actually the practices that we've observed and that have been revealed through the Royal Commission are significantly out of step with these mantras. And I think part of that is put down to greed, and the Royal Commissioner, Kenneth Hayne, has talked a lot about that in the interim report. The role of conflicts of interest that have driven some of the conduct or misconduct, including the fact that when Australia reformed the remuneration arrangements for the sale of investment products back in 2012 and 13, a reform package known as the Future of Financial Advice, or FOFA, commissions were banned at that point, but existing commission arrangements were grandfathered. And so there's been a lot of criticism of those grandfathered arrangements, and there's now speculation about whether those grandfathered arrangements will also be prohibited. So I think there's an intense focus on conflicts of interest at the moment. It'll be interesting to see what the Royal Commission comes out with in February. And again, it goes back to some of these industry-wide issues that I think were bubbling away for some time, and I think industry thought that they could deal with them reactively. But really, the cost of this massive inquiry has been enormous. Enormous in terms of legal fees, in terms of reputational costs. Market capitalization for some of these big firms has been hit in a very, very substantial way. So it's really important not to underestimate, I think, the impact of these risks when they do crystallize and exposed in the kind of way that has been the case in Australia.
Okay, thank you. The next questions probably will be for Keith. The question is, ask you to share the experience of SFC on education of intermediaries versus disciplinary actions of intermediaries. I guess the question is, which alternative is better to change the behavior or cultures of intermediaries? Can you elaborate on that?
Thank you, Stephen. I think you have to do both. The SFC adopt a so-called Provident approach. It's like it's a combination of everything. It's whenever you identify something that the regulator thinks there are major concerns, we will not just pass it to our enforcement department to investigate and wait for the regulatory message to be sent at the end of the process. The approach that we now adopt is to say upfront what we think is wrong, what we think certain behavior should not exist in the market. So we would issue circular, press release, and all that to everybody, basically. I think education, of course, is very important. So we have held compliance forums every year. Not to that scale. Very difficult. You have set a very difficult benchmark for us. But we think it's very important that we kind of have a sort of an annual kind of conference for our intermediaries, in addition to all other engagements, because there it will be a lot of seminars, trainings throughout the years. But it's also very important that we have a sort of a get-together on an annual basis. And of course, there will be a number of different topical issues that we need to provide guidance to the industry to explain or to elaborate on the different expectation, different standard, right? Now, so this back to disciplinary action. It's also a very important building block of the whole regime. So when something outrageous happens in the market, the regulator cannot be seen to be, doing nothing, and has to be doing something that is proportionate. It's like I said, at the end of the day, is what message you are sending to the market, rather than the fortune of the person or the firm that is subject to disciplinary action. So the short answer is a combination of everything.
Okay, thank you. Now I got another questions from the floor, and I would invite both Michael and Steve to answer it, because this is about the level playing field. Basically, the question says that the same insurance products can be sold through different channels. And if this is sold through banks compared to sold through the tied agents, what would be the treatment? Are they getting the same fair treatment? How about Michael first and then Steve?
So in our case, I think the answer is yes, because we're the conduct regulator for all financial services. So we have the Twin Peaks model in Australia. And yes, we look at the conduct, and we consider, we apply the same criteria. We determine the impact on consumers, the scale of the misconduct, whether other firms might be engaged in similar conduct, and much like the SFC and HKMA and the authority for the Mandatory Provident Fund, we apply a graduated list of regulatory responses depending on what outcome we are trying to seek. So we take into account all the factors that Keith has mentioned, and we try and make sure that we're considering issues holistically. We're not the prudential regulator, and sometimes issues that are within the remit of the prudential regulator are relevant, and so we make sure we're talking to the prudential regulator. So that's the challenge in Australia. I suppose you have a different type of challenge in Hong Kong because you have a sectoral model. But regardless, the communication is really important.
Well, from the point of view of the HKMA, I think the treatment is pretty much the same. I mean, so long as the products are sold through banks, and if the bank or the bank staff have breached the law or the relevant regulatory requirements, we will take appropriate, actions against the bank or the responsible staff. And that's why, in the past few years, you have seen cases where heavy fines have been imposed by either by the relevant regulators, such as the SFC, where we join together to conduct investigation in relation to mis-selling of investment products to bank customers, and we would also take actions against the individuals by way of suspending their registration with us as relevant individuals that come under our purview. So, in conclusion, I think all the whether it's a bank or bank staff, if when they sell products to customers and breach the law or the relevant requirements, like regulatory requirements, we will definitely consider taking appropriate disciplinary or enforcement actions against the responsible parties.
Thanks, everyone. Probably this time for me to close these sections. Before I close it, I would really like to thank all for coming these sections. And if you've got any feedback, please let us know so that we know next time when we do it, which sort of format, which sort of the contents, which sort of the style we should do it. And in particular, because I usually like to reward those people who's coming to my sessions. So I will just give some hint. As mentioned in my opening remark, we have just issued our first licensing requirement guidelines. So hopefully you find it useful. The next to come would be on our disciplinary guidelines and also our supervision regime. So once when all this has been issued, as said, we would love to engage with the industries. If you would like to talk to us, would like to see us, feel free inviting us to come to your functions. We want to talk more with you because we see that it is our job to explain what we want so that everyone who wants to be a good corporate citizen at least know how to comply with all these requirements. So thank you very much for coming to this session. Look forward to seeing you hopefully this afternoon. There will be more to talk about in the 4 p.m. section. Thank you.